guys, welcome to my channel. So before we get started, make sure to hit that like button, also subscribe to my channel. In this video, we will talk about how have crypto markets revolutionized financial freedom. So make sure to watch the full video. A new generation of investors have welcomed investing as a tool for financial freedom, and with the rise of access to technology, crypto markets provide a key step in democratizing wealth. As financial technology continues to captivate retail investors, the first quarter of 2021 demonstrated the power and problem of current financial markets. GameStop's mass appeal among retail investors on r/Wall Street Bets subreddit sent the stock soaring to $348 in January, forcing investment firms to close out short positions at a cost of billions. Zero-commission trading apps, such as Robinhood, received an influx of traders, requiring the platform to cease trading GameStop temporarily, locking retail investors out of the market. The resultant wave of criticism highlighted the imbalance in financial power. Cryptocurrencies have emerged as a financial instrument over the last year, but have reached new heights over the last quarter, becoming financial equality tools and placing power back in the hands of investors. Unique advantages of crypto investing. Over the last year, cryptocurrencies, such as Bitcoin and Ethereum, have become extremely popular with retail customers, reshaping how investors interact with financial instruments. According to the Financial Conduct Authority's CryptoSet Consumer Research Report 2020, 77% of those surveyed bought CryptoSets through an online exchange and 27% use CryptoSets to purchase goods and services, demonstrating the ease with which cryptos can be bought and used as a commodity for exchange. Applications like Robinhood, which were created on the basis of democratizing investing, have shown financial equality can only really be had when all parties have access to the same level of knowledge and control. This has led to a move towards decentralization, a process where a central authority is no longer brokering the actions of parties involved. Instead, users are reliant on blockchain technology to deal directly with each other in investments. A major benefit of decentralization is putting power back in the hands of users. Cryptocurrencies such as Bitcoin were designed as a decentralized alternative to traditional finance and therefore don't have a single point of failure, making them more resilient, efficient, and democratic. By allowing agents access to wealth without a moderator, where they can exchange on a virtual market with the assurance of security through a blockchain, this acts as a strong tool in empowering investors to take wealth building into their own hands. And after the financial crisis of 2008, the emergence of cryptocurrencies has provided an alternative view of how to build trust in the financial industry. Charles Hoskinson, co-founder of Ethereum and current chief executive of crypto and blockchain company IOC, explains how cryptocurrencies have a unique advantage. Our industry's technology is about brokering trust among people who don't trust each other, he says. Drawbacks of cryptocurrencies. While crypto has outperformed many traditional investments, its volatility is a product of the mania surrounding the investment, similar to that of GameStop. Daniel Ahmed, co-founder of Facet, a digital asset platform for frontier markets, says, crypto is certainly a democratizer of wealth, since it gives the average person exposure to fast-growing and high-potential return on an asset class. In my view, crypto sets like Bitcoin should be a longer-term investment for individuals, as day trading can be extremely risky in nature. Ahmed makes a point, as volatility has shaken the crypto market considerably. Bitcoin is currently on course to exceed its all-time high of $58,000 per Bitcoin, with alternative cryptos such as Ethereum, Litecoin, and Dogecoin mirroring the market's prosperity, with a rise in value of between 5 and 15% respectively. This follows weeks of investment volatility where Bitcoin depreciated by 20% in a matter of hours. Evidently, such extreme highs and lows can both encourage and discourage investors from entering the market, as both major gains and losses can be made within seconds. Ongoing market fluctuations may increase uncertainty for new investors, who may not be as well versed on market performance. One way of mitigating this is investing in asset-backed cryptos. Asset-backed cryptos can act as a hedge against traditional, more volatile cryptosets, explains Ahmed, since they reflect tangible economic value from real-world assets. Hoskinson agrees. Volatility is a big deal, and it's hugely challenging for commercial activity and retail adoption, he says. That's why we have stable coins and regulated products being created. This does come at the cost of decentralization. While asset-backed cryptos are an asset class, by introducing a real-world entity, the unique selling point of cryptocurrencies is lost. This is because the asset is at the mercy of the credibility, oversight, and regulation of a single entity or group of actors. However, Hoskinson believes they still have their place in the financial mix. He says, "You're able to trade on global marketplaces and have access to all kinds of new people. For example, non-fungible tokens representing art provides real utility. But how do you factor the insurance problem? How do you value a Picasso? Historically, monetizing art has been difficult and exclusive to those of a high net worth. By providing access to an exclusive asset class, it further highlights cryptocurrency's revolutionary potential." Hoskinson continues, "When you're talking about securitization and liquefaction of these exotic assets, there's some real value there, but it comes at the cost of decentralization. So while it's exciting, it's not exactly what people signed up for with cryptocurrencies. It's a big drawback to a financial tool deemed to put power back in the hands of the people." Another consideration is access to education. As a new market heavily reliant on technology, understanding how blockchain is central to the financial model will aid investors in making more informed choices. Carlos Betancourt, co-founding principal of BK Coin Capital, a digital assets hedge fund, promotes using education as a tool in wealth building. Knowing what's happening in the markets and educating yourself are all readily available options. Joining an online university certified course will help investors in understanding how powerful cryptos can be in creating financial equality. Future of cryptocurrencies. As the finance industry evolves, new investors should consider the ramifications of investing in cryptos. As a relatively young market, volatility is likely. Potential investors should be aware of the associated risks by bolstering their crypto knowledge further, as well as considering the level of investment made. However, including cryptos as part of a wider investment portfolio can aid wealth disparities through its democratization of finance, putting control back in the hands of investors and giving access to asset classes that were traditionally exclusive. Crypto markets need to consider how to build trust among new entrants. Regulatory bodies providing further understanding of how investments are protected will enable the market to develop further. Abdul Hasib Basit, board member of Global Digital Finance, supports this. "We must ensure the industry does a better job of embedding investor protection through high consumer conduct standards," he says. As the future of investing is changing, so are investors. Once exclusive to high net worth individuals and financiers, crypto markets have propelled a democratization of wealth, and this is only the beginning. Financial freedom with crypto. What can we do in the crypto and blockchain space to disrupt traditional finance and empower people? When crypto trading comes to mind, you might think of words like liberty, privacy, or innovation. But we're guessing that free is pretty far down the list. In November of last year, Shapeshift became the first crypto platform to offer free trading, as we saw the potential benefits that trading with zero commissions, fees, or spread could bring users around the world. When more tools and services in crypto are free or more affordable, we can offer a global audience better alternatives to traditional finance. That's why it's important to make crypto more widely accessible, so more people can benefit from a new monetary system. Rethinking traditional finance and banking. Many in the crypto space think widespread adoption is essential to making cryptocurrencies more appealing to the mainstream. But on the way to the moon, we should keep in mind those who need a new way to manage money. Let's not forget about the global events that sparked a need for an alternative to traditional finance and for many created a passion for cryptocurrency. Review some of the financial crises that cryptocurrency and blockchain technology aim to solve. The Greek debt crisis. Greece's financial crisis occurred from 2008-2018, when the country came close to defaulting on its debt to the European Union. The EU and IMF attempted to cut a deal with Greece, in which they would temporarily bail out the country if it put austerity measures into place. The government and the people refused the EU and IMF measures, leading to a bank run and banks limiting withdrawals to just €60 a day. Iceland's banking disaster. Iceland's financial crisis did during the global recession in 2008, when the country's three largest banks defaulted on tens of billions of dollars in loans to foreign investors. Foreign investors left the country. The Icelandic currency, the krona, dropped 50%, and the country's stock market fell by 95%. Bankruptcy was rampant among businesses, and the bank's debt was too large for the government to immediately intervene. Venezuela's economic collapse. The Venezuelan economic crisis began in 2013. By 2018, inflation was estimated at 80,000% and has continued to drastically rise. TIS estimated that 1/10 of Venezuelans have fled the country in the wake of the economic crisis, with many now living as refugees in Colombia, Peru, Argentina, throughout the rest of Latin America, and in the Caribbean. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.